Hey, everybody, and welcome to the Full Stack Actuarial keynote presentation here today. Today, we'll be talking a bit about Prudential's journey with homegrown open source valuation model. My name is Taylor Shaw. I'm a senior director at the Standard, focused on actuarial modeling. Before we get into it, I just wanted to provide a quick shout out to the sponsors of the conference. I think Aaron's going to put a quick slide up so we can show through who those are.
Yep.
Can they see it?
I just sent a request and here it is.
Okay, cool.
So if you could all let me know when you can see.
Yep.
All right.
Thank you, Aaron. So yeah, we have the Standard, Coherent, the Gunter Group, and Posit. Also wanted to quickly note the SOA antitrust pieces. Did I miss something, Aaron?
Nope,
All right,
antitrust
go to the
here.
next slide. Yep. So obviously, we want to make sure that we follow the SOA antitrust components of policy adherence, avoiding discussions on pricing, market allocation, membership restrictions, product standardization, and if necessary, you find that this is not happening, you may leave. So I think with that, we can go ahead and start with the keynote. One other thing I wanted to note for today is that we will also be having questions in the chat. I think we have an hour here. We'll have 45 minutes for the kind of scheduled questions, and then we'll have some time to answer questions as they come up. So please put any questions that you have in the chat, and we'll get to those at the end. So with that, I will go through a few intros and then we'll get into some questions. So joining us today on the panel, we have Brian Peterson. Brian is Vice President and Actuary at Prudential, leading actuarial global capabilities and reporting to the Chief Actuary. In this role, he is accountable for modeling in multiple global markets in support of valuation, forecasting, and pricing. He has held a number of positions in the company with a strong focus on asset liability management. We also have Keith Workman. Keith is Vice President and Actuary at Prudential, part of Brian Peterson's organization, and leading in-force modeling across annuities, enterprise cash flow testing, and emerging markets. He oversees Prudential's open source PyVal platform for annuities, as well as the integration of asset modeling capabilities to support financial reporting and forecasting across multiple products and jurisdictions. He has held a number of positions in the company with a strong focus on ALM and actuarial modeling. Finally, we have Bill Sember. Bill is Vice President at Prudential, part of Brian Peterson's organization as well, where he leads a cross-functional team focused on modeling and technology that supports financial planning and analysis, asset management, risk, and reinsurance. Essentially, everything outside the traditional actuarial department. Prior to his current role, Bill was on the insurance M&A team at KKR and has held a number of actuarial roles at Prudential. So welcome to the panel. Thanks for taking the time here today. And with that, we'll go ahead and get into the panel discussion. Real quickly, Aaron, I see you as like the key box on here. I don't know if everyone else is. Am I the key box right now? I just want to make sure when someone's talking, they'll be.
We see you.
Cool. All right, sounds good. Thanks for confirming. Didn't want it to be just Aaron, a big block of Aaron Smith all the presentation. Figured it was worth checking. All righty. So to go ahead and kick it off here today, we're gonna have Brian kind of set the stage to talk a bit more about the broader business context for the solution and what we'll be talking about today. Go ahead, Brian.
Yeah, thanks, Taylor, and thanks everyone for your time this morning or evening, depending on where you are. So we're excited to talk about homegrown capabilities for valuation today. I want to talk about first a couple of disclaimers. So disclaimer number one is that homegrown is a subset. Not all of our liability modeling for valuation is homegrown, but rather we continue to have a significant bet on various vendor platforms across the globe in Prudential. We have multiple in the US, we have multiple internationally, some are the same, some are additional. So vendors remain a key part of our overall modeling bet at Prudential. And then the second disclaimer that we have to reference is that homegrown is not the goal per se, but rather it's part of a broader context where our ultimate goal is what we call integrated modeling, or stringing together our best components. So, our bet there is to first simplify, and then second, to integrate modular components. So when we talk about simplifying, we want to code things once, across the globe and across end uses. But we want to bet on our best modular components and integrate them together. And when we're doing that integration at our best, we talk about doing that in one click. So again, homegrown is key, but it's not exclusive. It's part of a broader vision as opposed to the goal per se. So just wanted to set the stage with that before we get going on to more about homegrown.
Thanks, Brian. And yeah, I think it's great to be able to kind of share the context of this solution so that people know, what all is happening here. Kind of just talking more about Prudential generally and kind of this open source solution, would you tell us a bit more about what makes Prudential uniquely positioned to pursue this open source modeling solution?
Yeah, happy to do that. So I think, we are positioned well. I don't know if unique as in the only one, but I do think we have some advantages that are worth citing whenever we talk about, our journey in homegrown open source modeling. So the first one is, of course, scale. I think most folks are going to be familiar that Prudential is a very large, very complex global company. And so by extension, we have a very large, very talented actuarial team. And just by the flat out law of large numbers, we ended up with, a starting point of a deep bench of actuarial and other financial professionals with development skills. So that's advantage number one. Advantage number two is some of our history, where we weren't starting from scratch in actuarial, but rather there was a lot of homegrown modeling and other functions across actuarial, most notably in our investment function, where a lot of their ALM work, their hedging, was based in homegrown modeling. So we had the kind of modeling capabilities to start with, to work with. But we also, very importantly, had a model development platform where we've got a internal platform here at Prudential, which is very robust, which enables a lot of really cool stuff around version control and deployment to the cloud, grid, et cetera, that I'm sure we'll talk about more. So again, we've started from a very strong foundation, due to a scale, due to our history. So just wanted to get a couple of those unique points out there for people's consideration.
Thanks, Brian. And yeah, sounds like you all kind of had a good starting spot that you were able to then kind of go from where you are to kind of where you were to where you are. I think that's a great segue to this next question for Bill. Kind of how has this journey kind of started, and kind of how have you gotten to where you are right now?
Yeah, thanks so much, Taylor. So maybe before I go to where we started, I could talk about where we are. So maybe Brian gave the disclaimers. I'm going to maybe give the anti-disclaimers to make the point that we are using this homegrown model for serious stuff. So Prudential is one of the largest annuity writers in the business, and we have our annuity business on our homegrown model. So that includes north of $100 billion worth of individual annuities, including variable annuities, RILA products, as well as fixed annuities. Or another way of putting this is if something goes wrong with this model, we're in big trouble. These are going to audited financial statements for our GAAP reporting. These are statutory financials that ultimately affect our capital numbers going to regulators. So I think maybe Brian started out with a disclaimer that we're doing a lot more than homegrown, but I also want to make clear for the audience here is that this is pretty serious stuff. This is worth roughly 20% of Prudential's balance sheet, which is north of $100 billion worth of business. So if we screw up here, we're in trouble. So let me go back to the start. So why did we start doing this in the first place? So it was back in 2020, Prudential had first started selling RILA products, or registered index-linked annuities. And we weren't the first in the industry to do this. I wish we were, but we weren't. But at the time, there were significantly fewer insurers. These products, the sales go up every year. But at the time, there were significantly fewer insurers. So the capabilities within the vendor platforms were not what they needed to be. So RILAs are index products. So what does that mean? There's both a need for traditional actuarial valuation. We have to calculate reserves on these things, as well as you need to hedge these things. The index crediting is based on an equity return, and as sure as heck, that needs to be hedged. It was peak COVID at the time. It was back in 2020. So I remember sitting at home in my kitchen in my pajamas and just seeing how quickly our hedging team was able to get a model that was working, where again, maybe the hedging model doesn't go to regulators, but you better get that right. If you screw up hedging, you're losing millions of dollars every day. So seeing, hey, our hedging team was able to get a model up and running as soon as the product launched. And then my actuarial team struggling with vendor software we're paying money to the vendor and this is supposed to be making our lives easier. So pretty quickly, we were struggling to get this working. We saw our hedge model was working really well. So we got buy-in from our annuities chief actuary to do a 3-month pilot, really to answer the question, what can we do more quickly? Get the vendor software working or turn a hedging model into a valuation model? And like many things you do in life, you do something within one goal. This was strictly a business goal to start out with. Brian started out here, I think homegrown technology is not an end of itself. There is a business goal. We need to be able to value this business. So there's that business goal. And then this expanded from there.
Thanks, Bill. Yeah, quite the COVID project for sure. I think everyone had one. That's one's a bit more complex, but yeah, it's great to kind of hear a bit more about how you kind of realize that there's potential value here. So it sounds like in this process you learned a ton. Everything works magically, and now you have an open source model. More seriously, can you walk us through how you went from buy-in to implementation to also scaling of the solution? Oh, sorry, this is to Brian.
Yeah, so I'll tee this up, and I think Bill covered a little bit of it, but I'll ask him to maybe expand, and then maybe Keith can talk about where we are today. So it's funny, buy-in is a bit out of order because as Bill touched on, or maybe Bill will expand on, we actually had a very agile approach here, such that when we needed full buy-in from senior management, we had a lot to point to rather than a PowerPoint slide. So I'd characterize our buy-in with senior management at the time, my boss, the chief actuary, we were kind of asking for a bit of forgiveness rather than a lot of permission. By the time we got to where we were making a recommendation to pursue going live for valuation, we had gotten buy-in from customers, gotten buy-in from the team members, done a lot of great work that we could point to. And by the way, this is the first time we did this. As we've been in our journey, this has been a consistent playbook for us, which is kind of, hey, whether it's been other jurisdictions or Bill mentioned FP&A and other end uses, we've had a consistent approach where it's like do a bunch of work to kind of develop proof of concept to a prototype or somewhere in between, and let the work speak more than a fancy PowerPoint deck. So I don't know, Bill, if you want to keep going with some of the buy-in that you teed up, and then maybe Keith can talk about how that continues today.
Yeah, so maybe let me go into a little bit more about initial buy-in, then Keith, you can talk through where we are today. So this is probably the second part of the discussion today. I think this is supposed to be a technology discussion, and we're talking about non-technology items. I think this is so important. I think the first thing here is that with business partners, no one wants to hear about cool technology. So I love Git, I love CI/CD. I am super, super excited about agentic coding. These are things that make me personally excited. My business partners don't know what Git is, and they don't care what Git is. So I think the first thing is there needs to be an actual business problem. And the business problem here is we need a valuation model and we can't get our vendor software to work. And I think the second thing here is that really limiting the risk. So at this point, our models are large. We're using this for an $100 billion plus annuities block, but we started small. We started with a product that we had just started selling at the time. So at the time, it's a lower risk model because there's not that many business on the book, and can really test and learn this thing. And then I think probably the third point here is if you're like me, why do you become an actuary? You become an actuary because you can go take exams, or another way of putting that is you can go off in a room by yourself and you can get paid to study. That was the actuarial dream. But I think in terms of any sort of large scale model conversion systems project, it's not go off in a room. It's talk to people, hear out their concerns. So I think obviously we had our valuation partners. This is a pretty easy sell. Like we can't value the product. Like they literally can't do their job. But the other big partners I think we worked here was control partners. I think when we discussed Git, CI/CD, this really helped make the sale. Folks coming in with a perception of homegrown equals the actuaries are going to screw things up, and uncontrolled going to know, in our minds, we think our homegrown model is better controlled than some of our vendor software. So I think that was maybe initial implementation. Let me hand things off to you, Keith, to talk about how we scaled the thing.
Yeah, thanks, Bill. Yeah, I think really I just want to kind of add on to the point that Brian and Bill made just around outcomes and like really as we've scaled, that's continued to be a focus is just delivering outcomes, more broadly for new products, new jurisdictions, new uses. And I think that's just really how we've maintained the momentum, continue to create broader buy-in, and I think, some degree of FOMO as well. I think maybe the other thing I'll mention, kind of more from a technology lens, is just as we've scaled, model design has become increasingly important. And the team has done a great job of really designing the model in a modular fashion to be able to enable extensibility. So again, both sort of broaden the use of the model, but then also sort of the ongoing model development just becomes greater and greater. So again, just want to sort of call out, I think a lot of great work really around design, which has again enabled us to continue to scale.
Thanks, all. Yeah, so Bill, I think you mentioned a few things there about Git and CI/CD. I think we talked a little bit about the kind of the scope of this and the reserves it's covering. So I think you talked about needing it to be controlled. Could you talk a bit more about the controls that you're kind of utilizing here for this solution?
Yeah, sure. So I think controls were the first major thing that I learned about this. So when I first saw what Git and CI/CD were, I had a holy moly moment. I'm not going to use another word, but another word, we'll use holy moly because this presentation is being recorded. So let me talk about each of these. So Git it's the major version control software that all the technology companies use. So we think as actuaries, we're unique. So we have these models, they need to get locked down. If they're not locked down, then the regulator is going to go crazy on us. We're going to screw up our financial statements. But that need of we are building something and needs to be locked down and changed in a controlled way, that's like a more general software engineering problem. So everyone here, you go to Amazon, you go to Amazon.com. Amazon sure as heck can't have the Amazon.com website broken because someone accidentally changed something. So what Amazon, Google, Microsoft, they're all using for their code is this tool called Git, which very easily enables many people to work on the same code base and push those changes into one production version in a very controlled way. Um, and then when I started using Git, it was like, holy crap. So for every single change in Git, you can see who made the change, when they made the change, a before and after for literally every single change from the history of your code. So we've been using our PyVal model now for around 5 years. So I can go back and it's tens of thousands of changes in every single one. I have that full history. You don't have that with Excel. You don't have that with the vendor software. Fun fact, that feature is called Git Blame. I'm not going to ask why it's called Git Blame, but that is a feature that's literally called Git Blame within the software. The other big thing that we found that's been very, very useful to leverage from software engineering is CI/CD or continuous integration and continuous deployment. And what that refers to is how this goes from if I'm working on a model while I'm doing something on my desk, on my computer, how do you get from I'm making a change on my computer to the actual production version? So using tools like Jenkins or GitHub Actions, the software can enforce things like this change won't go into production until the right person has approved, or these are a set of 1,000 tests that all need to pass before this thing will be deployed. And these are things that as actuaries, we're used to doing these. So for example, we have a valuation model. We often have, you're going to have a version control log, which is often an Excel file, like who made the change, what the change was, and saving out the testing. But as actuaries, we're used to doing this stuff manually. And theoretically, like you could have a rogue actuary who said, oh, I tested this, but they didn't actually test this. With CI/CD, the software enforces this. The change cannot go in unless the test actually passed and the software enforces this. So I think this is the dream for actors. This is the dream for our control partners, where they can actually see this stuff. There's no Excel version control logs. There's no manual testing here, and a benefit of this is we can actually do a lot more testing. When we have our actuaries using Excel or traditional vendor models, they're running their tests one at a time manually. So you're limited in how much testing you can do by having the computer automate the test, and this is possible with homegrown models. You can do a lot more testing. So I think when we share this with our control partners, this was learning for them, but this was not, oh, this thing is less controlled. It's not, this thing is equally controlled. This stuff is more controlled than our traditional vendor models.
Thanks, Bill. I think with this next one, we'll kind of kick it back to Brian. At the very beginning, you talked a little bit about the vendor platforms that you leverage. Can you tell us a little bit more about how those are being used?
Yeah, they're used extensively. And again, we're proud of some transformative outcomes that we've driven because at the end of the day, the vendor platforms are just software. So with engineering best practices, we can really drive a lot of value here. So, we have very strong partnerships with our technology team. And so we're using best practices around version control. Bill just talked about Git. We have some of our vendor models on Git, which again enables us to have that simplified vision of coding things once. So that's whether it's cross jurisdictional, if we have any reinsurance, cross functional, again, same code used for valuation as is used for forecasting, as an example. But other best practices in terms of scaled compute, like we've done a lot of engineering to really get the most out of the grid or the cloud, depending on the platform. And then my personal holy moly moment in this journey the last couple of years with respect to APIs. So our ability to use APIs to call functionality from the vendor models to again integrate with other platforms, whether that's our core ALM platform or alongside other liability models, has been really powerful. And again, back to when we're doing that at our best, it's with one click, and our actuaries are writing that orchestration code in partnership with our tech partners and getting some real engineering best practices around that as well. So again, key part of our overall vision and transformation.
Great. Yeah, I think I'm hearing a lot of different kind of folks being utilized to kind of keep this solution moving forward. Sounds like you've got some, pretty strong engineering side. You've got maybe some IT, some actuaries. Can you talk a little bit more about the team structure that you're kind of using to maintain and drive this solution forward?
Yeah, and I see some questions in the chat about this. So this is timely. So, you know, um, I've discussed the history a little bit. I'll do that again here, but we'll sort of build to where we're at now. So again, the history of homegrown modeling elsewhere in the company, coding skill set is just part of the job description for a lot of our quants in our investment function, some folks in risk functions. So we had a real strong foundation to build on. Um, we've had a kind of one team mindset with these different partners. That's been very organic at the start. There was no kind of senior management, hey, partner together, this is a top-down requirement, but instead just building on relationships and explorations. But as we've had some success, the expectations have started to grow. They have been a little bit more top-down, if you will, from us as a leadership team. So again, while we partnered with different functions rather than building from scratch, and eventually we were able to start to tell our team, hey, we want to get into this at scale, so people need to start to learn this. Again, we had a lot of talent to choose from, back to our overall actuarial size and a lot of large numbers. But we did start to increasingly require, upskilling. We started to challenge our leaders when we were filling new roles to, recruit externally over time. So, we've had expectations grow up, expand quite a bit. So, and again, now that we're using this homegrown liability platform for many more products and many more end uses, we're, integrating with additional platforms like our homegrown ALM engine. We're building those integration capabilities, connecting assets and liabilities. Engineering rigor, Keith touched on this, Bill touched on this, has become an increased expectation. So we've evolved our team structure over time. We're not just actuaries. We're not just programmers. We have close partnerships with engineering and technology. We have some great engineering skill sets in our team as well. So yeah, this has come a long way over time from where we started.
Yeah, thanks. Thanks, Brian, for sharing a bit more about kind of how you're utilizing the team structure there. For this next question, we're going to go over to Keith. And Keith, just as a quick heads up, we've had a holy moly from both Brian and Bill. So your quota is still available for your holy moly. So looking forward to that. But yeah, on to the question. What value do you think you have unlocked as a result of the migration to this solution?
Yeah, thanks, Taylor. So yeah, I mean, as we've scaled this model, we've seen a lot of really positive outcomes. And, the big example I'll highlight is, Bill mentioned initially the focus was on RILA. As we expanded to our VA product, I think for me, it was just holy moly, we're saving over $2 million a year in just cloud costs, right? I think, we also saw runtime improvements of, 30 times. So pretty significant cost savings, pretty significant efficiencies. And this was powered by leveraging GPUs, actually. So, a lot of the same hardware that is used for things like machine learning models. So I think, we really saw just, kind of the possibility, of using some of these capabilities. In addition to, again, kind of the cost efficiency, really just having the flexibility has been really key. So, I kind of mentioned design before, but really the flexibility sort of enabled by design, has allowed us to continue to scale, to broaden, from a product standpoint, from a use standpoint, but also to balance that with, ever-growing, just sort of ongoing enhancement requests. So, I think, this model has really, enabled that.
Thanks, Keith, for talking a bit more about that. Could you talk a bit about, mentioned scaling a few times. What challenges did you face in scaling the solution?
Sure. Yeah. So first, I think anytime you're talking about, scaling a technical solution like a financial model, there's going to be challenges. And, I think that applies whether you're talking about a homegrown model, whether you're talking about a vendor model. I think there's common challenges there. There's maybe some that are more specific. So, obviously with a vendor model, you have reliance on the vendor, that you need to manage. So, I'll speak about this more so from the context of this homegrown PyVal model. But again, I think, there's always going to be challenges. So, for PyVal, I think a few broad areas to mention, there's sort of, governance slash testing, there's talent, and then maybe more so just general technical challenges with scaling. On kind of the governance testing side, actually, Bill covered this really well when he was talking about, controls and talking about CI/CD. So, we use capabilities like Git, like Jenkins, that really help enable parallel development, automation of testing. So, if we want to push, any change into our, production branch in terms of code, we have to, satisfy a number of regression tests. We also have approval for any change as well. And again, these are tools that have existed in the software engineering industry for quite some time, and I think it's great that we're sort of really getting the value out of these from a financial modeling perspective now. So yeah, like the next sort of category there would be talent, and I think key person risk is always going to be present, especially when you're talking about things that are very technical. Potentially even more so with a homegrown model. There's no sort of perfect solution, but we do try to mitigate that with documentation, with cross training, and actually, I think AI is helpful in this regard. So, we use GitHub Copilot, not just for sort of executing changes, but I think even just as a tool for like folks that are maybe relatively new, something that can be used to kind of help get up to speed on the model, get ahead of the learning curve. I think that's actually been quite valuable. And then in terms of skill sets, Brian alluded to this, but we do look to have a mix here where we have a number of people that have more of an actuarial focus, but we do also have folks with more of an engineering background. And I think for us, and I think this is becoming increasingly the case, I think having people that are really strong in both areas, I think that's where we get a significant amount of value. And then yeah, the last area I'll talk about is more on the technical side. And I kind of see this from a couple dimensions. One is just sort of the challenge of maintaining, this large and ever-growing, code base. And then, the other piece there is really just the hardware side. So just having the ability to scale up runs when we have so many more, kind of demands on our model. So, in terms of just sort of managing the model, managing the code base, so I spoke about design before, but one thing I would say is, as we're planning on a regular basis, as we're prioritizing, we do plan for things like optimization, addressing tech debt, structural improvements. I think we can never do as much of that as we want because we always have to balance it with just ever-growing business demands. But we are intentional about just trying to prioritize those improvements. And then more so on the hardware side, we've actually been working quite a lot with our tech partners recently where historically, we have been running more so on premise, but we actually are looking to move to the cloud. I think for, financial models, at least for us, it's a little new, especially given that we're using GPUs. But again, I think we've had, really good partnership with technology to really enable the cloud and just have that required compute capacity to scale.
Yeah, I think maybe Keith, adding on to some of your comments, and I think take some of the questions in the chat. So I think how we have partnered with our technology partners is something that has evolved over time. So yeah, I think Brian, when I started working for you 5 years ago, I think one of the mantras you said is technology should be a self-service enabler, not a full service solution. And what that means is, I think there's a traditional paradigm where the actuaries write business requirements, you send that over to your technology partners. 6 months later, you get something back and it's not actually what you want, and no one's happy. So I think as much as possible, really setting, I think, clear roles and responsibilities where I think we want our technology partners providing us the infrastructure, but for business logic, actuaries should be doing the coding. That's hard when we're writing our own liability models, our own ALM model from scratch. Like, there are legitimate engineering challenges. Keith mentioned before that we're using our liability model is GPU based. This is hard stuff. And it's not stuff that a typical actuary can do. So I think this is something where our team structure has changed over time. I think back when we started, when I was in Keith's role, there's a little bit of, we're just going to do this and we're not going to wait to get permission. So I hired some engineers on the team. I think that helped, but in retrospect, that wasn't the right solution long term. So now we're at the point where there's, I think, clear boundaries with our technology partners. So right now for our technology partners, they do have more official dotted lines into Keith, myself, and one of our peers. So I think there's both that accountability as well as, hey, technology partners should be sitting within the technology organization, not within actuarial. But I think by having a matrix reporting line, it keeps things focused on the business, and we avoid a situation where it's, hey, I'm going to give a requirement, and then 6 months later, I don't get what I want. I think the other thing to call out around scaling is, again, like, this stuff is hard. So I think we're using GPU models. This has been challenging. And to be, I think, pretty honest, like, we have not figured this out yet. There's really great cloud infrastructure right now for CPUs, and our ALM model is CPU based, and I think we have a really great setup for now. It's for any nerds on the line. It's serverless. We do around 70 model runs per day, every day on the cloud, and they all work. Serverless for GPUs is not a thing. So I think there are cloud capabilities for GPUs, but they're not as strong for CPUs. And this is something that we're figuring out. And I think this is the right trade-off. If we waited for this to be perfect, we literally never would have done this. But I have confidence this stuff is going to get better. And I think by using not just things that the actuaries need, but what does the world need? What do the technology companies need? All the technology companies need GPUs. So yeah, I don't have serverless GPUs right now on the cloud, but 5 years from now, I think we probably will.
Thanks, Bill, and thanks, Keith, as well, for providing some background, or sorry, some information about the scaling and also, yeah, the solution itself. So I think on to the next question, it would be for Bill. Can you talk a little bit about what a model change workflow looks like? I know you talked about this a bit, so yeah, maybe you have a little bit more color.
Yeah. So now we have these models in production, $100 billion worth of annuities. A lot of our ALM is homegrown models. How do changes actually get into production? So I think we've talked a bunch about Git and CI/CD on this call. We don't need to talk about this more. I'll just say again how big of a fan we are of Git and CI/CD. But I think the call out here is this has been very helpful, supporting one model, supporting multiple use cases. So I think maybe contrasting the setup that we have to, I think, maybe what Prudential looked like a decade ago, or maybe traditional actuarial setups, is we want our models to be able to, we want to be able to code our liabilities once and code our assets once. So I've been at Proof for close to a decade. When I started, we had one model that was set up for valuation, another model that was set up for forecasting, a third model that was set up for stress testing, and you code the same liability 3 times. That's not good for a variety of reasons. But I think one reason why that was a paradigm is that you're using software, and it was hard to have one model do multiple things. How can I know that if I change the valuation model, I'm not going to break forecasting? And automated testing has really helped a lot. So I think this is an area where I think the technology has been a significant enabler. What technology hasn't solved is people problems. So one model supporting multiple use cases. Another way of putting that is everyone wants everything all at once. So my valuation actuary wants something, our risk folks want something for stress testing, our FP&A folks want something for the forecast. Software does not solve that problem of conflicting prioritization. But I think that's the same problem that you have with vendor software as well. So we still face that problem, and I think that problem is never going to go away. But I think technology has been a significant enabler here.
Thanks, Bill. And yeah, that the people part of the whole solution is, I guess, the same for a lot of companies. Keith, you talked a little bit about modularity earlier. Would you mind talking a bit more about how you're using this to support the enterprise use?
Sure. Yeah. So this really connects to kind of Bill's point about really wanting to code things once. So, in this case, it's really designing the model in such a way that, we can reuse calculations, we can reuse components for different uses. So, for instance, mortality, that's generally going to apply across the board, look fairly similar. So, we want to be able to, you know, reuse logic when it comes to things like decrements. Another example is product features like index credits. I think there's going to be a lot of commonality there, but I think also there's sort of use or jurisdiction specific logic there that you need to accommodate. So it's the ability to again reuse logic, but then also be able to customize it as need be for whatever use you're looking at. And I think where we see that with PyVal is kind of going back to sort of the start of PyVal. Initially it was built for our Ryla product. Around that time, like Ryla was really a big sort of growth engine. We were really ramping up sales of Ryla. It started small, but then it started to increase significantly. Historically, we had sold a lot of VA business. But really more recently, on the annuity side, we've moved to sort of more of this all-weather portfolio. So we continue to sell a lot of Ryla, but now we're selling a lot in the way of fixed annuities, selling a lot in the way of fixed index annuities. There's a lot of product innovation as well. So just sort of having this modular structure has really enabled that extensibility to be able to cover again new product types, other jurisdictions, forecasting in addition to reporting, that sort of thing. The other piece I'll mention is just thinking about sort of integrating across different model components, which is really designing our models or best models in such a way that they can connect to each other. So I think Brian covered this very well early on, but there's an increasing need to really connect assets and liabilities, right? We see that in terms of US PBR. We see that in other jurisdictions as well. So the ability to essentially easily connect some of our best liability components with some of our our best asset model components. I think that's been really really key as well. And that's just part of that whole sort of integrated modeling vision that Brian spoke to.
Yeah, thanks, Keith. I think we've had a few talk of nerds here, and it's getting some love in the chat. For those of the technically inclined, I suppose this next question is maybe interesting. A lot of these solutions, Python, they all have like pre-built libraries, but you can also build kind of your own libraries as well, so to speak. And so I guess the question is, to what extent are you relying on pre-built libraries versus building your own things from the ground up? I think this one would be for you, Bill.
Yeah, let me take this, Taylor. And I can also, I think there are a few questions in the chat. It's good seeing you, Robert. It's good seeing you, Patty, about wanting to see the code. So let me talk through this. So yeah, you guys named it PyVal. That's built in Python. So let me start out with, I think, maybe why Python and some of the standard libraries that we're using. So again, I think it's something where we started with one premise and we learned a bunch about this. What was the original premise for Python? Python is easy enough to use for the actuaries. C++, Rust, boo, that's hard. The actuaries aren't going to figure that out. Python, the actuaries can figure that out. So that was the original premise for this. But I think the real benefit we've gotten from Python, I think that has been a benefit. And I think this is easier than if we were using something like C++ or Rust. But in my mind, I think the bigger benefit of Python has been Python is an ecosystem. Python has libraries. And there's quantitative libraries, like we're big users of pandas. We're big users of NumPy. Keith mentioned earlier in the call that our model is GPU enabled. We did not figure out how to use GPUs with Python from scratch. A big advantage of Python is Python has some really good GPU libraries. This is something I'm not going to say what the library we're using is. I think that this call is being recorded. So I think that's a little bit of our secret sauce here. But if folks want to know what GPU library we want to use, if folks want to actually see the code here, so I just want to put in a plug. We are always recruiting for smart, talented people, or nerds. So the nerds on this call, this is exactly the talent that we want at Prudential. So please drop myself a line, Keith a line, Brian a line. This is the obligatory. You all should join Pru, and this is the pitch. So if you want to see this stuff, please drop us a line. We're always recruiting for Prudential. You will have to sign your firstborn's life away in blood with a non-disclosure agreement. We are looking for nerds to join the company. But then I think the larger point here is just I think we've learned a lot. We're trying not to build this stuff from the ground up. And again, I think at least for me as an actuary, this has been a very, very rewarding experience. Like I've learned a ton, and this has been, I think, a lot more interesting work than if we're just doing something using another piece of vendor software. And I think kind of the team has found this interesting. So I think I mentioned earlier on the call, the focus of this discussion has been PyVal. We also have a homegrown ALM model. That was a project for my team 2 years ago that thing wasn't cloud enabled. Like we had this thing running on the desktop, and how do I get this thing running on the cloud? And there was a really talented actuary on my team who did that. Now at this point, this thing is mature, so our technology partners own our distributed computing platform for our ALM model. But I think if this sort of project is, hey, let's set up distributed computing, if that's an exciting thing for you, like this is the sort of work that this team is doing.
Thanks, Bill. I was told this would be a ad-free presentation. Only kidding. So yeah, this is a technology summit, and one of the big things going on these days is AI. And Aaron said I had to ask one question about it. So how are you all using AI with your solutions?
Yeah, so I can take this, Taylor. So I feel like the old man who walked 20 miles to school in the snow in his bare feet. And what I have to, like, we built this before AI was a thing, or at least before it was a thing to the insurance industry. But I'm excited here. Brian's excited, Keith's excited here. We've started using these things for, hey, I'm creating new functionality and I need to create doc strings or documentation for this. Like the AI can do that better than humans for, I want to create my automated test for my CI/CD pipeline. The AI can do that. I think that's great. What I'm personally more excited about this is I'm hoping now with agentic coding that we can get our AIs doing large-scale code changes, large-scale refactors. I think the North Star here is that I just want to be able to upload a PDF of a product spec and, hey, AI, please code in the product. And to be true, like we are not there. We are not close to there. But I think this is, again, something where I think it's skate where the puck is going, not where the puck is right now. The AI tools are going to get better. So I think just, again, I think a benefit of using open source software is we're not just using software that's built for the insurance industry. We're using software that's built for the technology industry. So PyVal, too large to fit into the context window for Claude Code right now. Yeah, that's a true statement in 2025. 2027, I don't know if that's going to be a true statement. So I think that's one of our goals is, hey, how can we truly leverage this thing, not just to be like kind of an enabler around the edges, but truly AI transforming the work that the modeling actuary is doing.
Thanks, Bill. So yeah, we're got just one last question here. So before we get to that, I just want to thank Brian, Bill, and Keith for taking the time here today to talk a bit about their journey on the open source software or valuation system, and kind of sharing some of their wins and their learnings for everybody. So thank you for that. Yeah, with this, I'm going to kick it over to Brian to talk a bit about what advice he would have for a company who would want to try this sort of solution.
Yeah, thanks, Taylor. So again, before I get into any advice, I'm going to have to again start with some advantages because again, I think there's some unique things that we benefited from at Prudential. So the first is again scale. So again, very large company creates a lot of modeling demands, but it also has created a large talent pool for us to draw from, both within Actuarial and, as Bill and Keith touched on, with our tech partners, other functional partners. So, and that's actually the second advantage is we've benefited from some tremendous partnerships, both in form of our customers, our tech partners, investments, risk, et cetera. So, really benefited from a lot of unique folks who are willing to help us out here, not very change averse. And then finally, our management. We've had very supportive management, supporting us along the way as we've expanded our homegrown platform, as we've expanded our broader vision, that we're supporting multiple jurisdictions, multiple end uses, et cetera. So we've had a lot of good things going for us. But that said, anyone asking for advice, I'd probably say two things. So one is start small. So, we talked about prototypes and proofs of concepts. We did not kick off from zero on a multi-year project. This has been a real evolution, learning along the way. But then the second, as Bill said, like if you start with tech outcomes and trying to make a pitch, you're not going to get anywhere. Start with the business outcomes, whether it's operational, whether it's a modeling need that isn't currently being met, whatever it is, like tell that story. Technology adds, zero value, in a vacuum. It's rather the usage of that technology to influence decision making, to get more operationally efficient. That's where the value is. And so I think, staying focused on the business outcomes as you're making a case. So hope that was helpful.
Of course. So yeah, I think with that, we're gonna head over to the chat. I feel like we have kind of spoken to some of these as they have come in, which is great. I was impressed by the panel's ability to be monitoring the chat while talking. Yeah, I think I'll try to find the ones that I think we haven't fully talked about. So I'll start with this one, which talks. We already talked about how big is the team and like kind of. But I think one of the other parts of the question is, do you have a two pizza style framework, which I'm not familiar with, maybe that resonates with y'all, on keeping the team tight and in alignment with standards and integration practices, auto testing, rapid deployment, and any success with DevOps-ish practice?
Maybe I'll start with kind of overall team size and then ask, I don't know, Bill, Keith, both of you want to sort of talk about the smaller teams. I mean, so we have a very large team. We're a large company. We're supporting multiple jurisdictions, again, multiple end uses. So, we're smaller than when we started. We've gotten a lot more efficient over time. But then, as Bill said, in a way, kind of unofficially, we've grown with our matrix partnerships with, Bill mentioned very close partnerships with technology. So, it's a lot to manage in total, but I don't know if Bill, Keith, you want to sort of talk about a little bit more locally for kind of individual problem solutioning. I don't know that we talk too much about the two pizza rule, but I think we have some more focused sort of teams depending on the problem set that we're tackling.
Yeah, no, thanks, Brian. And I did have to actually use AI to figure out what two pizza team meant. So I guess the idea is that, it's a team that's the right size that it would take two pizzas to feed them, which I guess is sort of like 5 to 8 people-ish. If those are all me, like, I'm going to need more than two pizzas, but that's beside the point. And one thing I would say, just kind of building upon Brian's point, is like I think yes, we are over our big company. We have a decent number of folks working on this, but we do work in sort of an agile structure where like we have folks that are sort of focused on different parts of the model. I think it might have been Bill that alluded to, we have also sort of investment professionals, we have partners that sort of also develop parts of the model from kind of more of a hedging perspective, essentially. So I think, while I wouldn't say, it's strictly sort of two pizza, I think we have more people than that, but I think that like we do try to kind of take this approach of really, having sort of particular focus areas and sort of, developing kind of in this agile model. And I think that's certainly a focus area too, in terms of like how do we actually, how do we create a model in such a way that we can enable parallel development. So I think that's something. It's not easy, but I think that also kind of ties back to structure to some extent. And the only other thing I would mention there is you've heard a ton about CI/CD and really just the overall sort of platform that we're using. So, our technology partners, they really create the platform, that we build upon, right? So, they create sort of the tooling and they provide it to us, and then, we're able to use that to build capabilities like PyVal. So, I think that that sort of allows us to really focus kind of on that business logic, as Bill alluded to, because I think we do benefit from essentially having tech partners that can really manage the overall shared development platform.
Yeah, maybe Keith, one thing I would quickly add. So I think kind of in addition to the team structure, just how do we structure our software? So I think kind of there's a term that's vogue right now with software engineering microservices. So we are certainly not doing microservices right now, but I would say we are doing services. So I compare to the traditional actuarial setup, it's like, oh, here is the annuities model or the individual life model. And we really try to set up our models are really software and our software is just applications. So trying to make these smaller than just one giant application. And to the point on team structure, very clearly defined ownership of these applications and data contracts. That this is the data that comes in this format, and that's the data that comes out, as opposed to one giant monolith model.
Thanks all for talking a bit more to that one. There is a question that came through on platforms that are used. I think you've talked a bit about that, but I'll kind of tag on to that if you want. How do you deal with security vulnerability issues within open source code?
I think, I'll leave it to the experts to get into the details here, but I want to emphasize this is where our close partnerships with technology come into play. Obviously, there's limits to sort of our expertise, and this is where we make use of the folks who are far more expert in these issues. So I don't know, Bill, Keith, you want to talk about that, or both of you?
Yeah, I could maybe start out. So I think Brian's point, strong partnership with technology. So I think Brian mentioned we had this platform TARDIS. TARDIS is a monorepo for our Python code. So we very deliberately, our actuaries are not downloading new packages. They're not upgrading the Python versions. The actuaries don't know what a Python virtual environment is. Package management is owned by our IT department. And from a security perspective, we think that's the right paradigm.
Yeah, the only thing I would quickly add is just, we have control partners that, they're really focused on things like protecting personal information, particularly protecting, personally identifiable information. And, we work with them as well. So that definitely as part of sort of the control structure, data security, protecting sensitive information, there's definitely a lot of robust controls around that.
Okay, thank you. Yeah, I think Keith, that your end of that question kind of talks about one of the other ones, which is Git and Python modeling can be used for health insurance with the PHI and PHI trust. I'm not sure if you all want to comment on that, or not really the specialty.
Yeah, so definitely, health insurance data regulations is not a typical focus area for us. It is a good question, and I saw some chatter around there as well. I do think, yeah, I would see this as really around like, what are your what is your governance policy as it relates to protecting data? To me, that's not directly synced up with sort of using, let's say, Git and Python from a model development perspective, right? I think you could, if it makes sense, use Git Python in terms of developing model logic. But I think separate from that, yeah, you obviously want to make sure that you have the robust data protections in place, especially for something, as sensitive as, as healthcare data. The only thing I'll mention there, just kind of, tying back to some of what Brian mentioned, is just really thinking in terms of outcomes. So like if we wanted an open source modeling solution for this product, like what is the outcome that we're trying to drive? Like what is the advantage over an alternative? I think we always just want to, come back to that, and because obviously, it's never a one size fits all solution.
Thanks, Keith. I think with that, we might have hit all the questions. I don't know if you saw anything on your end that you all wanted to address further. Okay, not hearing anything. I think we'll go ahead and close out the keynote. Thanks again to Keith, Bill, and Brian for the discussion here today. I really enjoyed it. I thought it's been really interesting to hear more about some of the solutions you're using and how you kind of have both multiple tools along with then lots of different folks to help kind of enable you all in this journey. So thanks again. Yeah, it sounds like there's a lot more full stack to go here today, so feel free to hop onto all of those. I guess I'll just say they're also recorded for, I think, 3 months. You can watch them again. Yeah, thanks again, everybody.
Thank you. It's fun. Appreciate the
Yeah,
opportunity.
thanks a lot.